business. Fox Business.
Bartmann is the CEO of Bartmann Enterprises. He's joining us from Tulsa. Look at these markets and otherwise. Bill, don't worry, we're not going to scrutinize the way that you speak. We just want to listen to exactly what you're saying. So,
the message is the most important thing.
It's great to have you, Bill.
Well, thank you. I'm going to try and be passionately authentic while we're talking.
Fantastic.
You already look like you are. Well, so where do you want to start, Robert? You want to start at the markets here?
Well, we haven't talked much about the PPIP in a while. It's sort of been pushed to the back of the room here. But Bill, you're creating a fund. You're going to be investing in the public-private investment partnership here. We're talking about buying toxic assets off banks' balance sheets. Just a reminder for any of our viewers who have not been well-versed in PPIP language. But talk to us a little bit about this. Why are you interested, first of all, in buying up these toxic assets? Why would you want to buy them? Obviously, you have a long time horizon to which you think they will obviously bring you profit.
Well, Robert, we participated with the FDIC and the RTC during the last banking crisis back in the 80s and the 90s. So we have some familiarity with this process and how we really expect it's going to unfold. And we see, quite frankly, a wonderful opportunity for average investors, common ordinary citizens as sometimes referred to actually participate in this bailout. So it isn't, this one is different than the Wall Street bailouts where quite frankly they were geared to one class of citizen. This one, the PPIP, is absolutely geared for every one of us, and so we see a tremendous opportunity where we can buy bank assets at a very, very low discount to value and quite frankly take advantage of that as the economy heals over the next couple of years.
Bill, what was the best thing about being involved in the RTC and the worst thing?
The best thing was there's some great opportunities, and quite frankly we made a great sum of money. The worst thing is anytime you do business for the government, you're doing business for the government.
Talk about that.
Yeah, exactly.
Well, and I think Rick Wagner is probably a classic example of how you can agree to one set of conditions and then all of a sudden sometimes the conditions change. And the government, unlike, business transactions where the two parties do a transaction tend to mean what they say and do what they say, the government, and I don't say this in a bad way, it's just a very pragmatic way, the government has the right to change the terms. They have the right to change the deal. And we're seeing that, and it creates a certain amount of nervousness in even the PPIP where the Treasury is going to be a 50% equity partner. And so even the deal that you strike on day one may not look like that on day two. So that's an inherent risk. So we think it's offset by the upside, but it is indeed a risk.
So you're saying the risk that the rules of the game may change, which is something a lot of investors in financial stocks, particularly right now, and automotive stocks are having to deal with on a daily basis, and bondholders as well. Just ask the Chrysler bondholders about that.
Absolutely, and that's one of the problems of what's going on right now with the way the bailouts are being run. Whether you agree or disagree on whether the government ought to be involved, I don't think we can disagree that the government ought to keep their word. That if the markets depend on certainty and security, well, right now we're creating uncertainty and insecurity by changing the deal whenever the mood and the fancy or the opinion polls swing one way or another. And I think the Obama administration's finally figuring that out, and I think now we're going to see more certainty rather than less certainty.
Bill, if this is such a great deal, why are we only hearing it's such a great deal from you and Wilbur Ross? Why aren't the markets excited about this? Chad wants to know how we can actually invest with you. So why are there so few of you out there speaking about it? Is it because the deal is so great that we want to keep it hush-hush? Or maybe not everyone agrees with you?
They don't always agree with me, and that's why Wilbur and I both made $1 billion out of the last fiasco.
Touche.
And quite frankly, we're not looking for a popularity contest or an opinion poll. We're merely expressing, here's my authentic, passionate, and tell you that we see a wonderful opportunity to make a great sum of money. Now, there are a lot of people who are they have trepidation about dealing with the government. That is why they don't even see the opportunity.
Did you really make $1 billion?
Yes.
$1 billion.
$3.5 billion if you're counting, but yes.
I am counting. That's great. We want to know how we can invest in you.
So how would an individual invest, with you in this? Is there an opportunity for these citizen investors, as you call them?
There is. We're actually teaching people how they can do it for themselves. That's part of what I'm doing now with the rest of my life, is showing people how they can take advantage of opportunities like this. So yeah, absolutely. It's what I show people on a regular basis.
How does it feel to make $3.5 billion?
Better than losing 3.5. Now, it is, Kathy and I, my wife for 35 years, we were bankrupt in 1986. We were literally broke, and I mean literally broke, $1 million in the hole. And we participated in the first FDIC auction in 1986 and literally grew from there. And it took 12 years, but we grew from bankruptcy to Forbes called us the 25th wealthiest people in America with a net worth of $3.5 billion, all from this kind of auction action, as we'd call it. So why am I excited? I've seen this movie before. I know how it ends.
And that sounds like quite a movie. Everyone on the board just wants to know how they can learn more, what they can do to invest. How do you respond to them?
Certainly. Without making this a shameless self-promotion, I have a book coming out at the end of May, a Wiley book called Bailout Riches, and that is indeed one way that they can learn how they can participate. Now, with SEC rules, I'm a little reluctant to say, give me a call and I'll send you a prospectus.
Right.
I don't think that'd be appropriate.
But in theory, folks such as yourself and other funds will be participating. You could pick up the phone and give them a call, and maybe, I don't know if Wilbur Ross is taking calls or not, but maybe some other funds will be.
We are taking those calls. We are anxious to watch people prosper.
Fair enough.
That sounds good. That's like a very clear message. Being that you've been through so much, so 1986 is when you filed for bankruptcy?
Yes.
And so then we go through the S&L crisis. That's quite a journey. What do you make of what's going on just right now? What stage we're at? I'm sure a lot of people want to know what your perspective is on basically life in the market.
Well, I come from a unique perspective, having been rich and poor and broke and rich a couple of times, and having gone from bankruptcy to billionaire in this kind of an economic crisis. I am probably more optimistic than most people are, because I see that, number one, the economy is going to heal. Number two, we will get back on our feet. Number three, this thing will pass. Now, will we suffer during a term? Of course we will. But, all of us who have a little bit of age on us, we've been through this cycle before, so we're not, in the throes of desperation. We instead are looking out with optimism, saying, how do we make the best of a very bad situation? And I've been unemployed. I've drawn unemployment. I've been on welfare. I've eaten, we'll call it out of a dumpster, for lack of a better thing. I understand and I empathize what's going on in America right now with 12.5 million people unemployed. But the good news is, each and every one of us in this great country, we can do something about the place we find ourselves in.
So, Bill, to that end, Tar Heel Tom sending in a note saying, wanting to know, where did you get the capital in '86 to make that investment if you were bankrupt? How would you go about this?
I borrowed $13,000 to buy my very first box of what they were calling bad loans. They didn't use the words toxic assets in those days, just bad loans. I borrowed $13,000, bought one box of loans, made enough money on it to reinvest and buy a second box, and a third, and a fourth, and eventually over 12 years. Now, this was not an overnight success.
Right.
It took 12 years to go from bankruptcy to billionaire.
What's the best thing about being rich?
There's so many nice things about it.
It's better than being poor, I guess, is really the answer.
It clearly isn't, and without getting soapy, the nicest thing about it is you and your family and your loved ones really can be treated in a way that you, as a male-oriented society, as we would like very much to be able to treat our loved ones.
So, and you were the CEO of Commercial Financial Services there. It was the largest, most efficient consumer debt collection operations, one of them anyway, in the world. So looking ahead at the credit card debt that is out there, the auto loans, are you expecting this to be the next shoe to drop here as we look at the credit crisis?
Indeed, Robert, and that's what I see different than what Wilbur sees. Wilbur is going to play in the securities arena. He's looking at commercial real estate and residential real estate and even some of the securities backing those pieces of dirt. I'm a consumer loan guy. I see right now $230 billion worth of charged off credit cards within the system, and I see $400 billion worth of charged off automobile paper within the system. And both of those numbers, now granted they're less than $1 trillion, so people aren't impressed with them anymore, but when you look at them in the scope of last year, they're 10 times larger than the charged off credit card and the charged off auto paper last year. So in 1 year, we're going to have a 10 times dilemma, which is kind of like the rat going through the snake, so to speak. And that is, when that hits, it's going to be like an aftershock to an earthquake. The earthquake was subprime and Alt-A and commercial real estate, and this is indeed smaller by scale only. But sometimes when buildings are weakened by the first earthquake, it's the next aftershock that really brings them down.
I knew that, being from San Francisco. Absolutely. Really quick here, I have to ask you our poll question of the day. I'm sure our viewers want to know, how would you rate President Obama's first 100 days in office? Very good, good, fair, poor, or very poor?
Good.
Nice to have you, Bill.
Thanks, Bill.
I hadn't had a
You're
lot of
welcome.
opportunities to talk to billionaires, so I thank you for indulging some of my off-color questions. Bill Bartmann, CEO of
Definitely keep
Bartmann
an eye on
Enterprises.
those loans he's talking about,
Hey,
too.
you know, he's